All right, guys, thanks for joining. So I was looking at the chart today, so you'll have to forgive me firstly, sorry, because it's quite late where I am and my daughter's in bed, so I have to keep my voice down a little bit. Um, but obviously I've been looking at the charts and we've had quite a bit of price action today, so I think it's useful for me to at least sort of share my view as we currently stand. So remember, not financial advice, but you know, this is talking about risk here, so we're talking about mitigating risk potentially. Anyway, so the current situation obviously is that the 3-day has opened red today. We've got 2 days basically before we receive a red. Now, if you look historically, generally, worst case scenario, we end up getting a nuke eventually. There's one instance where it kind of got it wrong a little bit here, but we stayed above the 50-day moving average, which I think is quite key, really. At the moment, we're kind of flirting with it, obviously. This is the orange line here. The green line is the 100-day moving average. So obviously there was a nuke as well over here. But generally what tends to happen is one or two things. Either we hold the 100. If we lose the 50, we end up holding the 100, at least for a bit, normally. And then make a decision whether we're consolidating and then sort of turn around and go higher. Or we get the nuke scenario. So we're going to have a look at that a little bit. But the key thing, so I don't want anyone to sort of panic when we have a look through this, but because, and this is the main thing to remember here, is the difference currently between this old nuke situation and where we are is that there's still got this big divergence between price and reserve on exchange. So we know that supply is still low on the exchange, and that was a big difference here. So if we do see a situation where this kind of thing happens, I would be more concerned than I currently am. But at the moment, that is the opposite is true. So at the moment, it doesn't appear like people are panicking and rushing to sell their spot positions. In fact, it says the opposite. So with that said, the big question now is going to be: does the 50-day moving average act as support, or can we reclaim it, or does it act as resistance? And also, you can see pretty much in each of these examples that we've got here, the key thing that needs to happen really is that Bitcoin needs to sort of break above this sort of consolidation period here to reclaim its upward trajectory. Pretty much in all of those instances, that's ultimately kind of what needs to happen. And so what that means is, at the moment, in my opinion, to be like really quite bullish again, to go to say for sure, not for sure, but good odds of going, on to 90 and sort of those sorts of prices, 80, 90, 100. I think we need to break 65k specifically. So where is it? So this is kind of like putting that sort of picture together. And what I would expect to happen in some way or another is that we're going to get a bounce up to this sort of initial consolidation before we had the deviation from that kind of day or 3-day range. You can see the same thing kind of happened over here. We did actually lose the 50 here, but we bounced back up towards this consolidation. So for me, the kind of line in the decision-making sand lies around sort of this 62 or 63k kind of level. So in my head, generally, so you guys obviously know that I've sold off some of my position. This is kind of how I see it. Should we come back up to those prices at the moment, in terms of at least a hedge? So this doesn't necessarily need to be a short or whatever. In my opinion, this is a good risk reward to at least manage your exposure should we come back up to that level, because we know that is likely to be a decision making point, and should we break it, we'll go higher. And I mean, even recently there's an example over here of this. You can see here where that would have been your decision making point there, and once it broke it, obviously we went significantly higher and we continued higher. So in my opinion, that's kind of the line to think about if you are thinking about managing your risk. I mean, you can see actually here we lost the 50, didn't we, as well, and we bounced back up to that line. So my gut instinct tells me that it doesn't need to be a gut instinct. I know that this is some cause for concern. If I ignored this, it would be stupid. But the question is just what happens next. There's obviously lots of different ways this could play out, and you've obviously noticed that I've got this on the chart as well, because when we are in this kind of situation, I like to consider all possibilities to make sure that I don't get myself too geared up when things are potentially not particularly certain. So because just generally speaking from experience, and I think most people who've traded this particular market quite a lot will tell you that knife catching is a fine art. You either get it right, or you get it very wrong, and if you come somewhere in between and you sort of get it half right, but it continues down lower, then you risk getting chopped up as well thereafter. So as it currently stands, I sort of favour this sort of situation here, where we don't necessarily just come straight back down to the 100-day moving average. Now, the reason why, it really all depends on what happens around today's close. I think if we close below the 50 and start finding resistance there's a good chance we just come straight down here. And then we probably need to consolidate within here. I'll just get rid of this for a second. That would be what I would kind of expect to happen. But I think there's a reasonable chance still that we find support around here. It seems to have had quite a good reaction so far. And that would sort of give us the potentially a bounce up to this 63-ish level that I'm talking about. You can see this is actually just the same as this. So it is actually very similar, as I was saying, to this in many ways. So, but as we know, the 3-day is currently red, unlike when we were here. So there is a bit more cause for concern, in my opinion. So again, either way, if we come down here, I do think we'll probably see quite a big bounce out of there. It depends. I don't know. The 50 will become, as I say, really quite important. If we do get something like this, again, two decision points at that sort of level that I was talking about, where you need to potentially consider managing your risk on your spot positions. So that's my immediate sort of view. The reason why I'm slightly bearish or slightly concerned about the bullish case beyond the 3-day is, again, if you look at open interest, right, whenever we had a big pullback in price, or quite a significant price pullback, you can see them all here, we got like really quite large sell-offs or quite large closing of open interest. So earlier on, Tonalt and a few others were sharing the absorption stuff in CVD. I think even Coinalyze shared it themselves. And so what that's saying is that open interest has come down a little bit. I mean, seriously, like only just really a little bit. It's still sort of in the same levels it was within this range here. But price has come down a reasonably larger amount, in my view, which sort of suggests, like, why was there no big close in open interest? So it does stack up, in my opinion, with the view that somebody is accumulating longs. Now, the question is, how long does that last? So there's going to be, out of this, a big old move, and I don't believe that it has happened yet. So either the guys absorbing it are going to win it spectacularly, and we'll end up going back up, or we need to have a big like flush. And again, I have pointed out over here that this sort of drippy price action combined with not really much happening in open interest doesn't typically bode well for price. So that is again another slight thing to be concerned of, because it's sort of saying, well, someone's absorbing, but what happens when they can't absorb anymore? So yeah, I think you need to have a plan basically. If you haven't already got one, you should have one already. But you can see that there's some clear things here to work with, which are, we've got the 100-day moving average, which has been acted as pretty nice support over here, and even over here when it was a disaster, and even over here when it ended up being good. And COVID, let's just ignore that one, shall we? So reasonably good odds, I think, have come at the 53 level. That's the same as where's mine? That'll be here, won't it? Not that one. There we go. That also just so happens to be exactly where the Moonraker first line of defense is, and the previous highs off here. So I expect this to be, to at least get a bounce here. So I will tell you my plan. It doesn't necessarily mean that your plan should be the same, but I'm going to definitely go spot long, but basically at 53 again, and then see. Now I was considering leveraging up sort of blindly here, but in my opinion, that's not necessarily the play. I might. What I'd rather do is actually wait and see how it does down here, and zoom in, and then maybe take a short-term trade, and that'll be back up towards the 50-day moving average, and the 63 if it gets there. So that's sort of, I'd like that situation the best. And I think that would still mean bull market still happily intact and all that sort of stuff. However, I'm also happy to wait and see what happens around the 50 DMA, and then if we recapture that, I could see potentially like a bounce into the weekend, with potentially an opportunity to sell my remaining spot up at 63, and that's then I'll sort of wait and see, because then that's this sort of risk area in here where if we get above there again during the week on a weekly close, whatever, I don't give a shit about taking the risk in between here if we're going on to 90k, right? That's just the way that it is. Sometimes there's a cost of doing business, and the cost of doing business is risk management sometimes. And if I have to give away some spot and I can't somehow make it up on intraday trading or whatever, then so what? I'll probably gear up and make it back anyways on the way higher. If we come down to 100, I've already said what will happen there, and I'll wait for spot, and then I'll see what happens. Might end up leveraging up, and then we go up like that. However, again, I would still be slightly concerned around the 63k level if we get back up there, and also the 50 DMA. So, I can see this sort of thing happening somehow. I don't know how it will happen, but that's kind of what I'm sort of coming around to. Now, that's the most likely scenarios for me. Now, I've decided not to go blindly long with no sort of like away from the desk, so that I can sleep at night, because that open interest dynamic, I just don't like it, and I did say it is a little bit similar to what we saw here. Now, if I turn on the liquidity tool, what I'll do is I'll show you where the expected 10x longs are. So you can see we've dipped into that already. I've been saying, there's likely to be liquidity here, and I still think that there will be liquidity below here. If you sort of zoom in, you can kind of see it's basically stacked in the same way, we have the rocket fuel. It is kind of stacked to sort of 55, and then it sort of drizzles out a bit to virtually nothingness around 53 again. So there's loads of things there, sort of saying 55 to 53, that looks pretty cool. But then below 50k ish or 50, there's another round of potential liquidations there. Not as thick as this, but there is some there. Now, just if you just remember that stuff, in total nuke scenarios, which again, don't think that I'm saying this is necessarily going to happen. You can see below the 100, there's the 3x liquidations. Now, the 3x liquidations are, in my opinion, worse than the hundreds. And the reason for that is because I think people are going with more conviction with 3x, 10x long, okay, I'll use a smaller account. 3x long, well, you're going to be potentially using your full trading account with that. So, if we were to lose the 100 below 50, not only do we have those 10x's there, we've also got 3x's as well. So in an absolute worst case scenario here, now as I say, just playing, because just want to be ahead of game if something bad happens, it looks something like this, right? And that would take us back to 40, and what do we have at 40? We have this. So yeah, I'm pretty comfortable we're not going below 40. And again, don't quote me on going and saying, oh, Phil's really fucking bearish because it could go to 40. Well, it could go to any price, right? So I'm just saying that that would be the absolute bottom for me. Without a shadow of a doubt, I'll be. That's the kind of place where, in this situation, I can sleep at night if I've got bids down here, right? If I've got bids up here for leveraging at 53, in the knowledge of all of that, it just I want to sleep at night, and so maybe not for me. So that's just me. Call me a pussy if you want. I still think I think 53 will probably turn out to be a great buy. I do have a small leverage position on FTX to go in there just because I know I'll kick myself if I don't have any. It's only very small though, but yeah. So that is my view at the minute. I mean, the other side of the coin, right, is, as I say, reserve is fine. Dynamic on exchange seems okay. What we have is some people with spot, I think, moving the price around when they know that there's liquidity because people are over leveraged because they think we're going to the moon. I mean, it doesn't take a genius to work it out that everyone thinks that we're going much higher. It doesn't mean we can't, but it does mean that we could make some real fear in the market before that happens. And, even if it is the absolute worst case scenario, i.e. this, well, we've been talking, and I did a podcast with Benjamin Cohen yesterday actually, and we both agreed we thought the cycles are lengthening and could go on longer. So, maybe you just get there in a slightly different way. So I'm still very bullish on Bitcoin overall, but I've played this game many times before, and this shit comes at you fast, and so you need to have a plan. So I've told you what my plan is and why, for the reasons why it is. You might completely disagree with everything that I've just said, but I'm just going based on just what does this chart normally do and how do people normally react. And I know that a break in the 50 DMA for some traders is an absolute guaranteed automatic short for those traders. And historically on Bitcoin, it's the right thing to do. You know, you should be long when Bitcoin's above the 50, and you should be short when it's below. Not necessarily short, but not not leverage long. Let's put it that way. Um, so yeah, I don't know if you guys got any thoughts. Live stream chat. Good evening. Blah blah blah. Caught the live stream. Link doesn't work. It works. It should be working fine. I've got it on my other screen, so I can see it's working. On Trading Light, you could watch the Finex buying, selling over the past couple of days. Yeah, I mean, like, you know, let me just, you know, the whale Joe 007. Where is he? So if one whale stack selling off 10% could do this to the price, imagine what 100 whales could do, yeah, when they're falling over each other. So I think he's sort of saying that there's a good chance it's him who's selling. It's definitely, we've seen this sort of style by him before, where he puts up the sells up here and then he fills and then he actually starts the real selling. We've seen that by him before. So and you know, there's some bids similar sort of stack to how they are up here. You know, conspiracy theory maybe, but maybe that's where he's wanting to close. So that's around that sort of 51 to 53 level. So yeah, it's an interesting situation, and it's time to have a plan. You know, for all scenarios. So hopefully I've helped cover off what I think each of those situations may be, and where I think if you haven't thought about things, you might think about stuff. So anyway, hopefully that was useful. I'm not going to post this chart because I don't want you to come back and say, oh, Phil said it was going to 40k, because I'm definitely not saying that. I'm sort of trying to be balanced, and I think something like that would be the most preferred outcome for me. But we know that if things start to change and we end up here, and that the funds on exchange go big, then that could be a great opportunity, is all I'm saying. And the big money is made being on the right side of this sort of thing, if it does happen. So not time to panic, time to have a really clear plan, which is probably based around, day moving, like daily action, as opposed to like intraday. Because at the minute, intraday price action is designed to chop you up and make you think we're going to go up. I can guarantee pretty much, I would put a big bet in that we're not going to do that. So you can take your time, is kind of what I'm saying, and make sure that you've got a good plan. So I'll keep you posted with sort of what my view is and stuff, but don't rely on me to tell you exactly what to do. You need to do the right thing for you, and I don't know how that's going to be, how deep you are in your position or anything. So yeah, manage your own risk. All right, so hopefully that was useful, and ciao for now.